Yeah, for background, Morningstar's had an index business since 2002, and we have dozens of ESG or sustainability themed index solutions. So we feel like we're well positioned, along with the rest of Morningstar, to help educate investors and continue the process of demystifying ESG investing, which has already come a really long way. So what we did is Morningstar Indexes looked at 5 years worth of data from 2015 to 2019. And so we did this in early 2020, so pre-COVID, pre-bear market. And what we found was on that 5 year period, when we looked at downside capture ratio, we found that 72% of our ESG screen indexes held up better than their broad market parent index for that 5 year period. So this means there's really good empirical evidence that ESG portfolios help protect investors on the downside in down markets. So this really helps showcase that ESG is not just some bull market luxury. It holds up in different market cycles. And so we repeated the study after the first quarter of 2020 to see how our ESG indexes performed during that period of intense market volatility. And we found that it was a really watershed moment for ESG indexing and ESG investing overall. Nearly 90% of Morningstar's ESG indexes outperformed their broad market equivalent. So again, a great proof point for ESG investing, especially a time of year for investors who are looking to maybe rebalance a portfolio or have a conversation with their advisor. And this trend of ESG outperforming non-ESG products has really continued throughout the rest of the year. Morningstar's own research has shown how well ESG products has held up quarter after quarter in 2020, despite all the market volatility and everything that's been going on. And so this is really critical. So Morningstar's manager research team has shown that investors are noticing and demand is growing for ESG products. In the third quarter alone, roughly 40% of all fund flows in Europe went into ESG products. So a very important sign of things to come. Underlying ESG data is the bedrock to building any quality ESG investment product. As the question points out, ESG data is not something easy to come by. It's very labor intensive, and it cannot simply be a box ticking exercise. That's why Morningstar Indexes has been so lucky to work with Sustainalytics for several years now. They're one of the leading providers of ESG data, and they have coverage of over 10,000 investments globally. Sustainalytics is really at the forefront of ESG data. They're a true leader in sustainability. They're a group that sets the dialogue and continues to innovate in this space, which really allows Morningstar's index business to innovate really right alongside them. So Morningstar is very fortunate to have finalized our acquisition of Sustainalytics back in July of this year. This really bolsters Morningstar's ecosystem, which really now includes embedding ESG in nearly everything that we do. We believe this really helps Morningstar empower investor success by improving our capabilities, including in the index space where ESG is core to almost everything that we do. It's important to note that ESG investing and ESG indexing has evolved well beyond just negative screens, and sustainability is an area where investor preferences tend to change very quickly. Morningstar Indexes has evolved to provide investors with a growing toolkit of different ESG solutions. Our index business takes ESG indexing in three general approaches, and those approaches tend to have a lot of overlap between them. The first one would be negative screening for values alignment. This is where you might get rid of sin stocks, or you might filter out stocks that do not meet your religious preferences. The second would be integrating ESG factors for risk mitigation. So this might be a strategy like a best-in-class approach to portfolio construction on the ESG side. Finally, would be investing with the thematic or impact focus of an area of the market, like environmental focus or gender diversity, minority empowerment, or aligning a strategy with UN SDGs, for example. So on top of these core offerings in these three different areas, we've worked with many clients to develop custom solutions that incorporate different aspects across those three pillars. For example, a client might want more or less stringent rules on their index. They might want have more negative screens or less, depending on their preference or their client set. Lastly, there's lots of clients looking to meet local regulatory requirements, which is becoming a strong theme across the EU as the EU action plan gets rolled out. It's important for investors to know how to use ESG indexes within a portfolio context. One way to use ESG indexes is as a core building block to your portfolio, whether it's equities, bonds, or alternative. For example, at Morningstar Indexes, we have our Morningstar Global Sustainability Index family. So there's over 20 indexes with different regional exposures. And these provide broad market exposure to companies with low ESG risk according to Sustainalytics ratings. This is a best-in-class approach to sustainability. It minimizes tracking error by controlling the differences in sector and regional weights to the parent index. You might also want to look at impact or thematic type exposure. So these can be core exposures, but these are also commonly used as something more niche in your portfolio. So it might be used as a satellite position as compared to other core positions. These impact or thematic type indexes or strategies, this is something that we really recommend for individual investors to explore a little bit more in depth. They might be a little bit harder to find out just by reading the name of the index or the strategy of whether they should be used as a core or kind of satellite exposure. And finally, investors can find outcome-based ESG solutions, and this is a growing trend as well. So for example, Morningstar has our Morningstar Sustainability Dividend Yield Focus Index family for investors who are looking for income as well as low ESG risk. So no, Morningstar Indexes has recently expanded our offering outside of equity to fixed income, where we were able to pair our broad existing bond index family with Sustainalytics to create a new ESG fixed income family. And while fixed income ESG is small in comparison to equity, Morningstar's own manager research team shows there's clear signs of growth in this area. And so we're also excited about combining our equity ESG offering alongside our fixed income ESG offering to create a set of ESG multi-asset indexes, an area where we think is sorely lacking in the market.